Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of the 20 to the 25 of October 2019. First of all, thank you very much for your time watching this video. I hope you find it helpful and educational, providing you several interesting ideas to trade. If you are new to the channel, I would like to invite you to subscribe. Just follow the subscribe button below the video. Remember to enable the ring notification so you are aware of new videos uploaded for you. Feel free to share this video with anyone you wish. It's completely free and open for the community with the wish to help and to give some trading ideas the way I see them. Also, I'd like to invite you to join my free Telegram channel. You can find the link to that right below my video in the description. And as well, join the live trading rooms where we cover all the trading opportunities day after day. The live trading rooms is part of the Traders Academy Club. The link to that you can find below in the description or right here. So, this is the weekly forecast for the 20 to 25 of October. As I mentioned before, we would be reviewing quickly the previous week, how it worked for us, what worked, what paid, what failed, what's still relevant, and what are the new opportunities for the coming week. On Monday, as every Monday, I publish my weekly forecast. Just go to the blog, vladimirribakov.com, or come back to the video, and below in the description and in the comments you would find the direct link to this weekly forecast text format. This is the summary of the video, so you can always come back and refer to the ideas as they are. So let's begin. The first pair we have been looking to trade was the dollar versus the yen. We expected to see two waves on the daily chart, and on the 4-hour chart we wanted to see retraces and rallies, taking us towards the zone of 109-110. Quick observation on the dollar yen, we continued higher, reaching the 109, did not go above it at least yet. So during the week we got the small retraces and nice continuation. Right now the pair is on the kind of a junction. From one side, the two waves on the daily, the 200 moving average, psychological 109, and a very, very stiff resistance. Bearish divergence is developing as well. From the other side, according to the weekly, we are still bullish because we are in the double cycle and a bullish divergence. So we should be going towards the 38 to retrace. That's a contradiction between the two time frames that should support each other. In that case, they don't. From one side, it still looks possible bullish according to the weekly. From the other, bearish according to the daily. 4-hour chart is also under bearish divergence. However, none of them yet provided a clear trend change. We have no false breakouts with bearish convergence. We do not have a structure of lower highs, lower lows yet. Therefore, the pair currently is neutral. And for all those of you who enjoyed the rally we had during the last week, it's time to step back, sit on the fence, and look for the next opportunities. Very interesting fact is that the complete majority, we're talking about more than 90% of the retail traders are involved in sell the dollar yen. And that's one of the reasons why we might still get something like that. Again, it has reasons for the buys according to the weekly, reasons for the sells according to the daily, in a lack of synchronization market conditions. I always find myself neutral, and that's what I do right now on the beginning of this week. The next pair on the list we have been trading was the euro pound, trading it to the downside, expecting retraces and further sell continuation. And this one paid and paid amazingly. We got the retrace and we got the continuation, enjoying from 200 more pips to the downside. Right now, game is over as for now. From my point of view, we are developing the bullish divergence and the slowdown. We can see several false breakouts, some spikes on the bottom. There is a good chance we're gonna see here some reversals. How deep the reversals would be, it's really not clear right now. Too many things lined up on the vote happened today in the UK Parliament, where they denied Johnson's deal and basically trying to make him asking for another postpone of the Brexit, the official dates at the end of the month. He said he will not do it. They will go for a vote again on this week. So too many things depend right now on the fundamental view. Therefore, it's best to abandon the positions and let the market relax, calm down, settle itself, and then look for the opportunities. We will definitely be talking about it in the live trading rooms during the week as the opportunities will build up. As for now, the beginning of the week, with the most recent events from the UK Parliament, it's smarter to step back and avoid it. So for those of you who got involved in the sales last week, enjoy your profits. And for those who are looking to newly join, let the market settle down first of all. Next one, Aussie versus the franc. Our idea is buy retraces. So basically we got the retraces, we got the buys. The way I see that, we are still under bullish pressure. However, the fact it does not gain a good real momentum, it's a suspicious sign, right? We don't continuously create higher highs, higher lows. So it's getting very, very, very tricky. Now it comes with the suspect of this triple double possibility, the fact we are still holding this top, right? And we don't create anything new. So this is again a pair that it's smart to go to neutral. As you can see, previous week things look amazing on some of the opportunity. This week these become neutral and not interesting. So for those who follow, I step back, or at least if you are involved, then in such conditions, what I do is I cut the exposure. Meaning, if I'm involved with one lot, just for the case of the example, okay, don't write down in the comments one lot or two lots or three lots how to buy. Doesn't make sense. Everyone with his own abilities and accounts. So just for the example, if I'm involved with one lot, it's in such cases when the momentum is not gaining as I expect, I go and I cut. Okay? Or if you have a good room of the profit margin, then just move to break even and free the risk from your trades. But for those who are looking for new opportunities, as for now, it doesn't make sense to be involved. Next pair for us was the pound kiwi, which paid amazingly. We expected to see retraces and continuation. Quick overlook here. We got the retraces and a fly. This pair knows to deliver. Right now, the sensitivity around the UK Parliament votes and so on is very high. We have no idea to predict how strong the reaction of the market would be. That's why with the beginning of the week going neutral, letting it settle down, then going and choosing the new opportunities. Dollar franc was one of these that paid amazingly as well. We expected to see, according to the daily triple cycle, we expected to see a ranging correction or two waves down with the break of the trend line. And here we go. According to the triple cycle, we were aiming the 50% of this retrace, and the 4-hour chart wanted to see the range or the trendline breakout. So we got the trendline breakout, and all the rest is history. This pair paid, reached the 50%, game over, job done, profits in the pockets. So I hope you enjoyed that, this pair, and let me know, did you trade it? Did you take the sells? Or alternatively, what is your expectations from now on this pair? Do you expect it to continue further down, or do you think there is a room for a retrace right now? A very, very interesting fact is that according to the retail trading, we can see that a lot of retail traders, we're talking about like 80% or more, are getting involved in buys already on the current price, expecting it to return. So let me know, what do you think about it? Are we continuing lower, or are we continuing all the way up again? For me, I am neutral. I reached my target. Now looking for interesting new opportunities. Euro Kiwi, the triangle breakout and the rallies. Long story short, triangle. Let me just draw it. No? Where is my line? Here. Triangle, breakout, retest, boom. Wonderful run for above 200 points. Classical rally. Now, the game is changing because we are creating the triple descending cycle on the daily. False breakouts in play. Beautiful engulfing. Beautiful piercing on the top here. Also could be called a kicker. And we are in a clearance zone. You can see flirting with this strong area. The divergence in play. 4-hour chart confirms the divergence by itself here, and on the bigger view, bigger scale, this divergence, it belongs also to the daily, but you can see that also on the 4-hour chart, and we are breaking below the most recent rising trend line. Ideally, of course, we should create the lower lows. So from my point of view, we are into the correction. We have this bearish structure developing on a 1-hour chart. Would expect some sort of a retrace and bearish continuation. Invalidation for that is the level 61.8. If we suddenly cross above that, that's a call out and looking for better opportunities. So Euro Kiwi paid amazingly to the upside, becoming bearish right now. New Zealand dollar is our next pair. Oh, by the way, back to the Euro Kiwi, which we just discussed. A quick observation on the statistical approval for the date teaches us that the top was created right here, next to the 17. It's on the 16, and the day after we are already to the downside. Massive confirmation from the Forex crystal ball and the statistical turnaround, confirming a possibility of a temporary top. And right now, I would expect it to develop a corrective movement. New Zealand dollar was our next pair. Let's have a look here. So the idea was by retraces. If we go straight in one move below 61.8, it would be suspicious sign. So we did go below 61.8, but in two waves. 1, 2. So it happened in two shots during the week. We got this opportunity and a breakout which failed, and then immediately another two waves, a bullish divergence, bullish hidden divergence, which turned to be bullish continuing, and the breakout of this trend line, and this one pays. Right now there is nothing against, so the way I see that, we should expect further continuation upside. My bullish view on the New Zealand dollar remains, and some retraces could happen, but I believe there is more to come, and these two waves still to develop itself. Next one on the list was the Australian dollar, which we cashed out previous week, but look what happens right now. It's bullish divergence on the weekly chart, bullish divergence on the daily chart, and voila, we are creating higher highs, higher lows, beautiful bullish structure. So buy retraces is the plan, back in the plan here. As per the short term, I believe we're gonna experience here some slowdown around this critical area, right? Some retraces, which later on we would want to go and to buy. And so for those of you who are for the short-term trading, as you can see, we have some critical zones here. First area here, second area right here around the resistance, third one is right here. In any of these areas, look for the bearish evidences like false breakouts, like bearish divergences, and of course candle pattern combination, lower lows combination, and look for the retrace. Once the retrace happens and provides some bullish evidence, it's time to look for the buy opportunities as well. Invalidation for this plan would be break below the rising trend line. Until then, we are moving in sort of a channel. Retraces and further continuation definitely would make a lot of sense. Next one on our list is the euro versus the franc, where we expected it to continue higher. Buy retraces was our plan. Euro franc delivered retraces and higher. Beautiful shot. As you can see, we have reached the 38.2 retrace, missing 2-3 pips, and right now the game is over, as we are in bearish divergence on a daily and a 4-hour chart against the buys that happened during the week. So it's time to cash out, and enjoy the profits and step back, looking for the next opportunities. The next one we enjoyed from was the Aussie versus the Kiwi, where we wanted to see a move low and with bullish divergence and a fly, or break above the trend line and then continuation further. So what happened with this pair was the break above the trend line. It happened right here. On previous week I explained that if this breakout happened, I would like to see this as a bullish structure on the lower time frame, and we got it. We got the retrace, the retest, a bit deeper, and another push. So Aussie Kiwi remains under the bullish pressure, and the idea remains right now the same. We can continue to see that going all the way up to develop this leg, or try to create second leg down with this divergence and then to fly. It does not change any of the view, which simply still stand for the same. Look for buy evidences with retraces. Buy evidence could be bullish divergence, bullish candle structure, hold of a supportive area, Fibonacci's level with bullish turnaround, and so on. So that's for the Aussie Kiwi, which also is very nice. And before I move to the other instruments of the commodities, several new opportunities. The first one, euro dollar, a pair where 90+% of traders are in a sell, where we in Traders Academy Club this week switched to the buys. Our plan was, directly from the trading report of the Traders Academy Club, our plan was bullish structure we are for buys, expecting to see the reach of the previous high and to cross above that. Basically, our invalidation was if we break below 61.8 of this structure. What happened with the euro dollar was this exactly. We got the movement. So the question is, what's next? And the way I see that, the most recent divergence on the weekly is bullish. It's a pretty strong hold of the psychological 110. It tried to go below that, but as you can see, it failed to hold below for a significant time. We are building up 3 increasing candle patterns, which stands for the structure of 3 bullish soldiers. The idea of the daily is where we got false breakout here, and now full convergence, simply bringing us to the idea of retraces to come and further continuation upside. It is a fantastic structure here of higher highs, higher lows. Retraces are welcome, but I believe it's just to provide further opportunities to the upside. Invalidation in that case is pretty deep, but is the 61.8 Fibonacci retrace of this rally, because this is the trending structure we develop here. If we suddenly go below that, it kills the bullish view. But as long as it holds, retraces and buys will be the plan. Keep in mind that short-term retraces are more than welcome, because the 1 hour chart is developing some sort of a structure by itself. This area definitely could provide here some sort of retraces just for further continuation. For all those of you who are running in the buys, enjoy. Those who are not, look for retraces, bullish evidences, and buys. And the next one for this week is dollar CAD. Where is my dollar CAD? A pair that I was looking to see if it managed to hold this area to provide some bullish evidence for buys, but it never managed to hold the area and goes below that. No bullish evidences, which brings me back to the original view. The weekly is the triple cycle to the upside. Never yet delivered to the 50% correction. We are still under the bearish structure of lower highs, lower lows. And right now the most recent divergence on the weekly becomes a bearish hidden divergence. On the daily chart, we are holding here a bearish divergence as well. Right now we are breaking to create lower low, and the 4 hour chart is creating a structure, trending structure of lower highs, lower lows, which makes me think we are in a bearish momentum, and sell the rallies should be the plan for the coming week. And that's my view on the dollar versus the Canadian. Another fact that is very interesting here is, of course, retail traders. A lot of traders, well, we are again talking about more than 90%, yes, are buying, which is understandable on the cheap levels. And that's what makes me think we might experience here these short-term rallies, which could make them happy, right? But then, as in the majority of the times, the market could go against them. And that's why my personal analysis with the psychological view definitely here contributes a sell opportunity from my point of view. Invalidation is 61.8. If we suddenly cross above that, it then erases the bearish view. Let me know to which part do you belong of the dollar CAD. Are you bullish or are you bearish? How do you see this pair going and where to? I will take this opportunity once again to invite you to my live trading rooms, where you would enjoy from all the opportunities we have day after day. Just join us to Traders Academy Club and enjoy from a full access to all the live trading rooms. Also, I invite you to enjoy our free Telegram channel, where we share a lot of ideas, posts and educational materials for the community, completely free. And of course, thank you in advance for your time watching this video, for joining us and enjoying the content we have for you. So, Dollar Cat, I'm looking to sell the rallies. Let me know, what do you think? Are you buy or are you for sell? Next one on the list is a pair, not that standard pair maybe, but interesting from my point of view. We are talking about the cat franc here. The pair is still keeping this structure, and it's still holding this resistance of the rounding 0.75. It is creating a bearish hidden divergence between these two tops, and inside ongoing bearish channel. Daily is sort of a triple cycle by itself, with the bearish divergence, a hold and false breakouts in play. 4-hour chart comes from a cycle by itself and bearish divergence, and right now looks like gaining some sort of momentum to the downside. The way I see that, as long as we hold this top, which we would call invalidation, the idea would be here, sell the rallies. So cat franc is another pair joining to the list. Other opportunities were related to the pounds, for example, I would not include right now because I have no clue how the market would translate or digest the current developments from the parliament. And now we are going to the commodities. We had a couple of them, natural gas and gold. Natural gas, we are bullish in our view and it's going good. Nothing changes as for now. My view remains bullish. And the next one was our gold. Gold. Here we go. Right inside a bearish channel and bigger range. The idea is bearish. Nothing really happened this week, and that's why my view remains looking for sell opportunities as long as we hold this structure. And that's pretty much it. And very interesting fact about the gold, by the way, is that the power of the sellers and the buyers is equal. Completely equal. We are talking about 50-50. And that's one of the reasons, by the way, why the investors are waiting for, to see where the first money involved, always retail traders, or early entries, would take the gold too. I think that this will attempt to create some buys, which will later on push it lower. But we will see how that goes, of course. But again, as long as there is nothing changes, my view remains bearish. Again, currently no bullish signs. I might be wrong. I might be totally wrong here, but I would prefer to see that pushing slightly lower before we are talking about anything new to do with the gold. That's pretty much it for today and for this week. Once again, I would like to thank you for your time watching this video. As you can see, we have several new interesting opportunities. We trade a lot of great opportunities delivered from the previous week and became neutral on this week. part of the game, just to know, to enjoy the profits, right? Not always we can be involved in any single given time with any single given instrument. Sometimes it's time to sit on the fence, and sometimes it's time to take the money. And that's what happened to us in many of the opportunities from previous week, like dollar franc, like pound kiwi, like euro pound, dollar yen, and others. Several new opportunities shared with you, and several more to come during the week. And for all those of you who are in the live trading rooms of Traders Academy Club, I'll see you there with a lot of fresh opportunities day after day. Thank you very much for your time watching this video. I wish you a fantastic trading week, and I'll see you during the week. Yours, Vladimir Ribakov, Traders Academy Club.